Bernard Madoff's journey began in Queens, New York, far from the power centers of Wall Street. The borough was a patchwork of working-class neighborhoods where dreams of prosperity mingled with the daily grind. In these streets, ambition was often a necessity, not a luxury. Raised by European immigrants who had come to America seeking a better life, Madoff grew up in modest circumstances. His family's apartment was small, their resources limited, but their hopes for the future were boundless. From an early age, Bernie was taught the value of hard work and perseverance, but it was his relentless ambition that truly set him apart from his peers. Early on, Madoff realized that projecting success could be as valuable as achieving it. He learned to dress the part, to speak with confidence, and to carry himself with an air of quiet authority. Even as a young man, he understood that perception could open doors that might otherwise remain closed. In 1960, with a small loan from his father-in-law and his wife Ruth by his side, he launched Bernard L. Madoff Investment Securities. Their first office was humble, a cramped room with second-hand furniture and a single phone line. But Bernie's vision was anything but small. He dreamed of building something lasting, something that would make his family proud. Starting as a penny stock trader, he quickly gained a reputation as an innovator. While others clung to old ways, Madoff embraced new technology, pioneering the use of computers in trading. His willingness to adapt and experiment helped him carve out a niche in the rapidly changing world of finance, and he soon became known as a forward thinker, helping to shape the very foundation of the NASDAQ. This forward-thinking image made him a Wall Street maverick. He wasn't just another trader, he was a symbol of progress, a man who seemed to be one step ahead of the competition. His confidence and innovation drew attention, and soon, people began to take notice. His legitimate market-making business was successful, executing trades for major clients and earning industry respect. Madoff's firm became a trusted name, handling billions in transactions and serving some of the most influential investors in the country. His reputation for reliability and efficiency was unmatched. This real success provided the perfect cover for what would come. The trust he built with clients and colleagues alike became a shield, allowing him to operate with little scrutiny. Behind closed doors, however, a different story was beginning to unfold. Madoff's dual identity, innovator and insider, made him nearly untouchable. He moved seamlessly between the worlds of legitimate finance and secretive maneuvering, always maintaining an air of respectability. Few could imagine that the man they admired was capable of deception on a grand scale. As a former NASDAQ chairman, he was woven into the very fabric of Wall Street. His influence extended far beyond his own firm, shaping the industry's future and earning him a seat at the table with the most powerful figures in finance. His reserved, understated persona inspired trust. He was never flashy or ostentatious, preferring to let his results speak for themselves. This quiet confidence reassured investors who saw in him a steady hand in a turbulent market. His offices were sleek but not flashy, reinforcing his image as a stable, reliable figure in a volatile world. Every detail was carefully curated to project professionalism and integrity, from the minimalist decor to the efficient staff. Investors weren't just buying into his firm, they were buying into his character. They believed in the man behind the business, convinced that their money was safe in his hands. This faith would prove to be both his greatest asset and their greatest vulnerability. Madoff's carefully crafted reputation became the foundation for a deception that would shake the financial world. Every handshake, every promise, every carefully chosen word added another layer to the illusion. He was seen as a pillar of integrity and innovation, a man whose word was as good as gold. His influence reached far and wide, and few dared to question his methods. This trust would prove to be his greatest weapon. It allowed him to operate in the shadows, shielded by the very people who admired him most. The stage was set for one of history's most devastating financial crimes, a scheme so audacious, it would leave the world reeling and forever change the way we view trust, ambition, and the true cost of unchecked power. The public face of Madoff's firm was a model of legitimacy, a high-volume market-making business, respected and audited. From the outside, it was the very picture of Wall Street success, a bustling office in a prestigious Manhattan skyscraper, with employees coming and going at all hours. The company's name was synonymous with trust and reliability, and its reputation was burnished by years of apparent transparency and compliance. Madoff was hailed as a technological pioneer, a key architect of the NASDAQ. He was known for his innovations in electronic trading, helping to modernize the way stocks were bought and sold. Industry insiders admired his forward-thinking approach, and he was often invited to speak at conferences and industry events, further cementing his status as a financial visionary. This reputation was his shield. Awards and accolades lined the walls of his office, and regulators rarely questioned his methods. Clients, competitors, and even watchdogs saw him as a pillar of the financial community, someone above suspicion. But on another floor, a secretive investment advisory arm operated in total isolation. Few employees even knew it existed, and those who did were sworn to secrecy. The separation was physical and psychological, a world apart from the legitimate business humming above. Entry was by invitation only, making clients feel privileged and special. The exclusivity was part of the allure, creating an atmosphere of mystery and elite access. Only a select few were allowed past the velvet rope, and each believed they were part of something extraordinary. The fund promised steady, almost magical returns, regardless of market turmoil. Year after year, clients saw their investments grow, seemingly immune to the volatility that plagued others. The numbers were so consistent, so perfect, that they seemed too good to be true. Clients received official-looking statements showing consistent gains. Each month, envelopes arrived with detailed reports, reinforcing the illusion of stability and success. The paperwork was impeccable, with every figure carefully calculated to inspire confidence. The paperwork was flawless, the numbers convincing. Auditors and clients alike were reassured by the meticulous records, never suspecting that the entire operation was a carefully constructed mirage. The exclusivity and secrecy only heightened the allure. Whispers of the fund's success spread quietly among the wealthy, each new client eager to join the ranks of the privileged few. The legitimate business generated real profits and credibility, which Madoff used to mask the fraud. The success of the market-making arm provided perfect cover, allowing the deception to flourish undetected for years. Employees on the market-making side had no idea what was happening just floors away. They went about their work, proud to be part of a respected firm, never suspecting the shadowy dealings hidden behind closed doors. The two sides of the firm rarely interacted. The separation was deliberate, ensuring that questions were never asked and suspicions never raised. Only Madoff knew the full truth. The investment advisory business was a complete fabrication. He alone held the keys to the deception, orchestrating every detail with meticulous care. He alone orchestrated the illusion. Every move was calculated, every document crafted to maintain the ruse. Even his closest employees and family were kept in the dark. The deception was so complete that those nearest to him never suspected a thing. Madoff was the master puppeteer, controlling every string, ensuring that the facade of legitimacy remained unbroken while the truth stayed hidden in the shadows. At its core, Madoff's crime was a classic Ponzi scheme. No real investments, just money from new investors used to pay old ones. He promised high, steady returns from a secret strategy, but no trades were ever made. Billions flowed into a single bank account, while clients received fake statements. The illusion was perfect, until the flow of new money slowed. Madoff's reputation and exclusivity attracted a constant stream of capital. People begged to invest, fueling the scheme's growth. But every Ponzi scheme is doomed to collapse. When too many investors want out, the money simply isn't there. The promised profits never existed. The scheme's survival depended on endless new cash. Madoff knew the clock was ticking. For decades, he kept the illusion alive, but the math was inescapable. Eventually, it would all come crashing down. Madoff's genius wasn't just in his financial acumen, it was in making people desperately want to invest with him. He understood human psychology better than most, and he used that knowledge to craft an irresistible allure. People didn't just seek him out for returns, they sought him out for the status that came with being one of his clients. He rarely solicited clients directly, preferring to let his reputation and mystique do the work. Instead, he relied on a network of feeder funds and the powerful force of word of mouth. This approach made it seem as if investing with Madoff was a privilege reserved for a select few. This calculated distance only added to his mystique. He became the wizard behind the curtain, a figure shrouded in secrecy and intrigue. The less people knew, the more they wanted in. His reputation as a former NASDAQ chairman and a fixture in high society made him seem untouchable, above suspicion. He was seen as a financial insider, someone who had already proven himself at the highest levels of Wall Street. Madoff moved effortlessly in elite circles, turning casual friendships and social connections into a steady pipeline for new money. At charity galas, country clubs, and private gatherings, he was always networking, always building trust. People invested not just because of the numbers, but because their friends did. Trust was contagious, and in these circles a recommendation carried enormous weight. If someone you admired was in, you wanted in too. The fund's steady, modest returns seemed almost too good to be true, safe, reliable, and consistent, especially in a market known for its volatility. Madoff's results were never flashy, but they were always reassuring. Madoff appeared almost reluctant to take on new clients, as if he was doing them a favor by letting them in. This air of exclusivity made access feel like a rare opportunity, something to be coveted. This psychological tactic only heightened demand. The harder it was to get in, the more people wanted it. Investors lined up, hoping for a chance to be accepted. When someone was finally accepted, they felt privileged, like they'd been granted entry into an exclusive club. That sense of belonging was intoxicating. The illusion of stability and exclusivity was nearly impossible to resist. People felt their money was safer simply because it was with Madoff. Madoff's true genius was in manipulating trust and social psychology. He understood that people crave security but also status, and he offered both. He didn't just sell investments, he sold the feeling of belonging, of being part of something special and exclusive. That powerful sense of privilege blinded even the most sophisticated investors. They ignored warning signs, convinced that their access meant they were safe. In the end, it was the perfect setup for disaster. A masterclass in deception, built on trust, exclusivity, and the irresistible lure of belonging. Warning signs appeared years before the collapse. In 1999, analyst Harry Markopolos alerted the SEC, arguing Madoff's returns were mathematically impossible. The SEC received multiple credible complaints but failed to act decisively. Madoff overwhelmed investigators with confusing data and relied on his sterling reputation to deflect scrutiny. His firm's secrecy and unusual structure, acting as its own broker, advisor, and custodian, should have raised alarms. He used a tiny, obscure accounting firm instead of a major auditor. These red flags were ignored by regulators and investors alike. The illusion of legitimacy was too strong. For years, the truth remained hidden in plain sight. The 2008 financial crisis shattered Madoff's delicate balance. As markets crashed, investors rushed to withdraw their money. The steady inflow of new investments dried up. Redemption requests soared to $7 billion, far more than Madoff could cover. The assets didn't exist, the trades were fiction. The cash in the bank was nowhere near enough. The scheme was collapsing in real time. Madoff grew increasingly desperate and erratic. His employees noticed the strain but had no idea of the looming disaster. The mathematical certainty of collapse had arrived. The end was no longer theoretical, it was days away. Madoff knew he couldn't sustain the lie any longer. The global crisis had exposed his private catastrophe, he had to confess. In December 2008, with nowhere left to run, Madoff confessed to his sons, Mark and Andrew. They had worked in the legitimate side of the business, unaware of the fraud. Expecting a routine meeting, they instead heard their father admit, "It's all one big lie." He revealed the fund was a massive Ponzi scheme, insolvent with billions lost. Madoff wanted to use the last remaining funds to pay bonuses before turning himself in. His sons were stunned, then horrified. They faced an agonizing choice, help their father or turn him in. After consulting a lawyer, they chose to alert authorities. The next day, federal agents arrested Madoff. He offered no excuses. There is no innocent explanation. The news sent shockwaves through Wall Street. The truth had come out, not from regulators, but from his own family. Madoff's collapse devastated tens of thousands, ordinary people, retirees, and charities alike. Life savings vanished overnight, the human cost was staggering. Some victims lost everything, facing poverty or worse. The psychological toll was immense: betrayal, shame, and despair. Charities and universities lost endowments, forcing cutbacks and closures. The ripple effects crippled essential organizations worldwide. Even the Madoff family was destroyed. Mark Madoff died by suicide, Andrew succumbed to cancer, blaming the stress. Ruth Madoff was left isolated and penniless. The family name became a symbol of fraud and ruin. The damage was permanent, the scars indelible. After his arrest, Madoff was briefly under house arrest, sparking outrage among victims. Public pressure led to his imprisonment before trial. In March 2009, he pleaded guilty to 11 felonies, avoiding a public trial. At sentencing, victims confronted him, describing the devastation he caused. Madoff's apology rang hollow. Judge Denny Chin called the crime extraordinarily evil and sentenced him to 150 years in prison. Madoff's assets were seized, and a trustee began recovering funds for victims. The process has been long and incomplete. For many, the loss was irreparable. The king of Wall Street had fallen, but the pain endured. Bernie Madoff died in prison in 2021, but his legacy of fraud endures. His name is now synonymous with financial deception. The scandal exposed deep flaws in financial regulation and investor trust. The SEC's failures led to reforms, but public cynicism remains. Madoff's story is a warning about blind trust and the lure of too good to be true. It highlights the need for skepticism and due diligence. His crime eroded faith in financial institutions and forced a reckoning on Wall Street. The phrase Madoff proof now means rigorous checks and balances. As long as greed and fear exist, the risk of another Madoff remains. Remembering his victims is the best defense against the next great lie.